The man sat across from the bank manager, gripping a pen that felt heavier than it should. His signature was about to finalize a deal he barely understood. He was 28, newly married, and proud to be buying his first home, a dream he had worked for years to achieve. The banker smiled, reassuring, tapping a stack of neatly printed papers. "Just sign here," he said, as if this moment was nothing more than a formality. What the man didn't know, what he was never supposed to know, was that he was walking into a trap, a mortgage that would cost him 3 times the price of the home. A loan structured in a way that ensured the bank profited off his debt, not his success. His interest payments alone would keep their lights on for decades. At first, everything felt normal. The monthly payments were manageable, but then the fees started creeping in, subtle, almost invisible at first. A late charge here, an adjustment there. The fine print he never read came to life in ways he never expected. Every call to the bank ended the same way. It's just policy. By the time he realized the game being played, it was too late. His financial future was already owned by the bank. This isn't just his story, it's the story of millions. People unknowingly handing over their financial freedom, believing the system is built to help them, when in reality it's engineered to extract as much as possible from their pockets. Because behind those glass doors, beneath the polished smiles, the banks have rules. Rules they follow but hope you never learn. The bank vault doors were thick, imposing, designed to inspire confidence. Inside, stacks of cash sat in neat, bundled rows, millions of dollars locked away in a climate-controlled fortress. A customer walking past might glance through the reinforced glass and feel reassured. My money is safe here. But what they didn't know, what they were never meant to understand, was that those stacks of cash weren't just sitting there waiting for them. They were already gone. Fractional reserve banking is the greatest magic trick ever performed. A customer deposits $10,000, believing it belongs to them, tucked away in a secure vault. But behind the scenes, the bank takes that deposit and lends out 9,000 of it, keeping only a fraction in reserve. That 9,000 is handed to a borrower, who then deposits it into their own account. The bank then takes 90% of that and lends it again, and again, and again. That same $10,000, the one the first customer thought was theirs, has now multiplied into $100,000 worth of loans. Money is created out of nothing, not printed, not earned, but simply imagined into existence by keystrokes on a computer. It's a system built on trust, an illusion that only works as long as everyone believes in it. But the moment doubt creeps in, the moment too many people try to withdraw their money at once, the entire house of cards collapses. The envelope sat on the kitchen table, unopened for days. A credit card statement, its edges slightly curled from being shuffled between a pile of junk mail and overdue bills. He already knew what it said, the same balance, barely shrinking. The same minimum payment, just enough to keep the wolves from the door, but never enough to set him free. $37. That's what they asked for. A number so small, so manageable, that it felt harmless. But deep in the fine print, in letters so small they might as well be invisible, the truth sat waiting. Paying just the minimum would stretch his $5,000 balance into 25 years of payments. Not 5, not 10, 25. A quarter of a century shackled to a debt that should have been a momentary mistake, but had now been weaponized into a financial life sentence. By the time he paid it off, he wouldn't have paid $5,000. He would have paid $14,000. This wasn't an accident, this was the system working exactly as designed. Debt isn't a burden to banks, it's an asset. Every month that balance lingers, it generates pure profit. Every interest charge, every late fee, every penalty is another drip in the ocean of wealth flowing upwards. They don't want customers paying off their debts, they want customers maintaining them. The text alert came at 6:17 a.m. Overdraft warning. A red notification flashed on his banking app. He barely opened his eyes, still half asleep, but his stomach sank before his brain even registered what had happened. Negative $12.38. He had $14 in his account yesterday, a coffee, a gas station snack. Small, forgettable purchases that should have cleared just fine. But deep in the fine print of his bank's policies, hidden behind the friendly branding and customer-first slogans, a rule existed. One that allowed larger transactions to be processed first, smaller ones later. A system designed to push his account into the red just enough to trigger an overdraft. And the punishment, $35, a $35 fee for being short by $12.38. But that wasn't all, because now every single transaction after that, the coffee, the snack, the subscription he forgot about, was considered an overdraft too, each one stacked with another $35 penalty. In a matter of hours, $140 vanished. The teller slid the deposit slip across the counter, her nails clicking against the polished surface. "You're all set," she said with a practiced smile. He nodded, feeling a quiet sense of accomplishment. $5,000 into savings. A small but important step. On the screen behind her, bold blue letters glowed, APY 0.01%. He didn't notice it then. Why would he? Savings accounts were supposed to be safe, right? A place to let money grow. A foundation for the future. But months passed, and something felt off. His balance barely moved. 2 cents. That's what his money had earned. 2 cents on thousands of dollars. Meanwhile, the bank had no problem offering him a 16% interest rate on a credit card, a 7% car loan, a 6.5% mortgage. His money was worth nothing to them unless they were the ones lending it back. This was the scam, the grand illusion. Banks don't hold money, they multiply it. They take deposits and flip them into loans, charging hundreds of times what they ever pay in interest. The spread between what they give and what they take, that's where the real money is made, and yet they still have the audacity to sell savings accounts as if they're a gift. They'll push high-yield accounts that offer 2%, maybe 3% in a good year. But here's the ugly truth. Even the best interest rates can't outrun inflation. Every dollar saved is a dollar that's losing value every single day. Because while he was earning pennies, the price of milk crept up. Gas rose, rent climbed. His savings account wasn't protecting his money, it was draining it in slow motion. The banks knew this, they counted on it. That's why they never teach people about real investments. They don't tell customers about index funds or treasury bonds or anything that could actually grow wealth. They just print brochures with happy families and words like financial security while quietly robbing them blind. He stared at his statement, at the extra decimal place in his earnings, and something inside him clicked. The bank wasn't helping him save, it was keeping him poor. The card arrived in the mail like a golden ticket, sleek, embossed with his name in raised silver letters. It felt heavy in his hands, not just in weight but in promise. $10,000 credit limit. The letter inside was even better. Congratulations! You've been pre-approved for 0% APR for 12 months. Earn cash back on every purchase. Get rewarded for spending. It felt like free money. He could finally buy the new laptop he needed, book that vacation he had been putting off, cover bills without stress. The bank had given him a tool to manage his life, or so he thought. At first everything was smooth. He made purchases, paid more than the minimum, and watched his reward points pile up. Every swipe felt like a win, every statement a reminder that he was building credit. But 12 months passed in a blink. The 0% APR vanished. The remaining balance, just a few $1,000s, was now subject to a 27% interest rate. Suddenly, the minimum payment barely touched the principal. Every month, the total barely budged, no matter how much he paid. The house had been hers for 11 years, a 2-story colonial with a yard just big enough for summer barbecues and autumn afternoons spent raking leaves into piles for the kids to jump in. She had signed the mortgage papers in a haze of excitement, gripping the pen as the banker slid document after document across the desk. 30 years is standard, he had assured her. Most people go that route. Smaller payments, more flexibility. She didn't question it. Why would she? Owning a home felt like winning, a symbol of success. The American dream in a contract with fixed monthly payments that seemed affordable. But buried in the numbers was a reality she never considered. The house would cost her not once but twice, maybe even 3 times over. A $300,000 mortgage wasn't really $300,000. By the time she reached year 30, she'd have paid closer to $650,000. Interest, the silent killer, would bleed her dry. And that was only if she never refinanced, never missed a payment, never fell into the traps banks had carefully laid. She had been locked in at 3.2% interest, a great deal at the time. But when rates dropped, the bank called. Ever thought about refinancing? We can lower your monthly payment. What they didn't mention was that she'd be resetting the 30-year clock, handing them decades more interest in exchange for a slightly lower bill. The letters stopped coming. No more overdraft warnings, no more credit card statements with balances that never seemed to shrink, no more urgent offers to refinance or take out a home equity loan. The bank had lost its grip on him. It hadn't been easy. At first, every dollar felt like a drop in an endless ocean of debt. He had spent years playing by their rules, believing the system was too big to fight. But the moment he stopped feeding the machine, everything changed. The first move, cutting off the leeches. He switched from a major bank to a credit union, no monthly fees, no maintenance charges for keeping his own money. The customer service rep wasn't reading from a script, wasn't pushing another product. The difference was instant. Next came the debt. No more minimum payments, no more chasing 0% APR illusions. He attacked the balances, starting with the smallest. Each paid-off debt was a chain broken, a card cancelled, a credit score that dropped at first, then climbed higher than before. But escaping wasn't enough. He had to flip the game on its head. Banks made money by keeping customers uninformed, so he started learning. Hidden fees? Negotiable. That $35 overdraft charge? Gone with a phone call. The mortgage lender tried to slip in a prepayment penalty, caught it before signing. Every trick they had used against him, he now used against them. His savings no longer sat rotting in a low-interest account, losing value to inflation. He moved it into index funds, where the returns crushed anything a bank could offer. His checking account? No fees, no gimmicks, just a tool, not a trap. And the best part? He still used banks. But now, they worked for him. Credit card rewards paid for his flights, but the balance was paid in full every month. A sign-up bonus from a new account. He collected it, then moved on before they could sink their claws in. One by one, the old habits disappeared. The stress, the sleepless nights, the feeling of being trapped, it was all gone. The system had been built to keep him powerless, but now he was untouchable. Somewhere, in a boardroom filled with men in tailored suits, a quarterly report showed a number that irritated them, a lost customer. No more fees, no more interest payments. They had counted on his ignorance. They lost. The bank lobby was quieter than usual. No line at the teller, no friendly greetings from a customer service rep eager to upsell a new exclusive account. He was here for one reason: to close it. The same account that had once felt like security. The same credit cards that had once promised rewards and flexibility. They had been weapons used against him. He had spent years feeding the system, believing the polished advertisements, trusting that banks existed to help. But now he knew better. The manager hesitated. "Is there anything we can do to keep your business?" He almost laughed. The same institution that had charged him for overdrafting by a few cents, that had encouraged debt while pretending to offer solutions that had made more money off his mistakes than his successes, now they cared. But it wasn't personal, it was never personal. Because to them, customers aren't people. They're profit centers. Every account, every loan, every balance is a carefully calculated number in a system designed to extract as much as possible. He had played by their rules once, that's why he lost. The truth is simple. Banks win when you stay uninformed, when you accept their offers without question, when you believe that a mortgage, a car loan, a credit card balance is just a normal part of life. But the moment you understand the game, everything changes. Knowledge is the one thing banks can't take from you. The more you learn, the fewer traps you fall into. The more you question, the less power they have. The system isn't built for you to win, but that doesn't mean you have to lose. The paperwork was signed. The account was closed. He walked out, past the smiling posters, past the brochures promising financial security. Outside, the air felt lighter. The weight was gone. For the first time in years, his money was truly his.